Hey guys, welcome back to the channel. Late Thursday night, just put together this impromptu video on this spy whale that I've been tracking for about a month or so now. May 15th is when they initiated their position. It is now June 15th. So let's just jump right into it. I've been tracking this whale, as I mentioned, for about a month now. They've been rolling their position, how many times now? So one, two, three rolls now. Three rolls. Many of them taking place in the last week or so. So today is the 15th. We had a roll yesterday. We had a roll today. Excuse me, a roll today, a roll yesterday, and a roll on the 9th as well, with the position having been initiated right here. So I've broken it all down right here. Currently, as we stand, this trader has, at the minimum, a 57 million profit and is currently free rolling. So they have free positions with just straight profit. They have 38,000 SPY 448 strike calls expiring July 7th, as well as 38,000 of the SPY 442 strike calls expiring June 14th. So this is what this is the tweet from the initial position. As you can see, May 15th, around 12:30 or so, we'll call it. 47,000 volume, average floor price of 268. So that's them starting their position. I've actually pulled up all of their past and present positions in the Chain Explorer, which is a pretty handy tool. What you can do is you just type in a ticker, punch in an expiration date, a type, call or put, the strike price, and it'll pull up the contract chart. So right here we're looking at the initial position, so I've just kind of laid them out here chronologically. So on May 15th right here we have their massive volume. There might have been a lot of copycat traders coming in here. Where's that? So right here, 515, lots of volume, big change in open interest, remaining, and then here's their exit. And as you can see, 100% of the volume that took place on June 9th was part of a multi-leg trade, which is the indicator that the position was rolled. So anyways, here is their start of their position. You can see in the little hover over, if I move my mouse to try to show you, it'll close the hover over, but kind of right where my cursor is, it says average fill 269. So they got in those at 269. Here's their exit 259. As previously mentioned, 100% multi-leg volume. So if you actually click on the candle in this view, it'll pop open a new window with the time frame selected. So here is their entrance. You can see just a lot of contracts coming in here, huge sizing, huge money. This was with SPY trading at 412 on May 15th, 412 on May 15th, with a strike price of 422, with the contracts expiring tomorrow. So these contracts were purchased May 15th. Just a straight 1 month expiration trade. So that's the entrance. Here's the exit. So we'll click on that one. Close this window here. What is this one? Close this one as well. So this is the exit. And as I mentioned, a high percentage of that volume was from my multi-leg trade. We flagged that for you here with this little symbol, as well as the code will begin with ML, which stands for multi-leg. So what you can do is you can just click on this arrow right here, and it will pull up trades that it believes are potentially the other legs of the selected trade. So we have right here the 422s that we saw them open. This is on June 9th. So they have now transacted as part of a multi-leg trade a whole bunch of now SPY 435 calls expiring June 23rd. So that was the second part of the position. So we've just went over, they bought the 47,000 calls on May 15th. Now on June 9th, they are closing their position and rolling into a further dated position of a higher strike price while maintaining a whole bunch of profit. right? So they have maintained 33 million in profit realized because their initial position went from 12 million to 45 million. They're rolling into a new position, which is only going to cost them 12 million. So 45 minus 12, you got 33 million, and this free position, which we'll take a look at right here. So this is their new position right here, the SPY, 435, June 23rd expiration calls. Just a whole lot of them. Let's take a look at the chart right here for these. So we don't have to look back as far as a month for these because this was pretty recent. So right here, June 9th, you can see it in the table as well, almost 80,000 contracts traded. Now you may ask yourself, if they were buying the calls, why is it transacted at the bid? That's a pretty good question. I'm going to try to keep my explanation as quick as possible just for the sake of this video. But as you can see here, so when you trade a spread, the fills can just get a little bit weird because whoever's filling your trade, they have two legs to work with. They don't necessarily have to give you the perfect fill on each one. They can kind of take a hit on one leg of the fill, but then make up for it on the other leg, if that makes sense. So as you can see here, the closing of their calls, the closing of the original position took place at 960 and 961 fill prices, with the bid ask at 971, 996. So these were filled significantly, quote unquote, below the bid. And while the new position was opened, opened and transacted lower than the bid as well, it was not nearly as far below the bid. So these are taking place almost 10 cents, 11 cents below the bid. This is taking place only 1 cent below the bid. So like I mentioned kind of earlier, whoever's filling this position, they're taking the hit maybe here, but they're making up for it right here, right? So they're getting less money for opening, for filling this order, but they're paying out less right here, if that makes sense. So this is also a great example, and this is just commonly misunderstood, that traders assume that any trade that is transacted at the bid or closer to the bid is a sell, and any trade that is transacted at the ask or closer to the ask is a buy, and that's just not the case. And we have just a really good example of that right here. So back to the chart. So here's them entering. And remember, we said that not all bid side transactions are sells, not all ask side transactions are buys. So I have chalked this up as a buy taking place at, again, I'm going to hover over, I put my mouse cursor kind of at the same level. You can see the yellow bubble. It says average fill 165. So these contracts in the span of how many days is that? 1, 2, 3, 4 days went from 165 up to 490. So 490, and as you can see here, again, very high multi-leg action on their exiting candle here. And this is just a really easy whale to follow because there's no other volume going on that's distracting us, right? It's just a clear candle. So here's the initial trade. Let's go back to the initial trade. Here's their entrance. Yes, there's a little bit of volume going on right here, but like you can kind of just eyeball it and see that, okay, you know, similar size volume right there. Same thing right here. And then you so and forth, you'll see it on the other chains as well. So again, we can just click on this candle right here to take us to June 14th. I'm going to close these extra windows right here. So right now we are looking at the closure of the SPY 435 calls. Here's a nice big multi-leg trade that we can take a look at. So as we can see, here's the SPY 435s, 40,000. As you can see, this one is taking place quote unquote closer to the ask, right? So you might think it's a buy, but this is their sell. And here is them opening up their new positions. Now both of these are taking place above the ask, quote unquote, but it's just, again, the spreads can just get a little bit weird. So now they've split into two different positions. So if we go back to the reference tweet here, so we have now witnessed them closing their 77,000 SPY 435 strike calls. This was on the 14th, so this was yesterday. So now they have now opened up the 440 strike calls for July 7th and the 442 strike calls for July 14th. And I have those charts right here as well. So we got the 440s. What time frame do we need here? Just 2 days, right? Yep, so we got the 440s and the 442s. I'm using the 2-day time frame for both because both of these trades were opened yesterday. As you can see here, we got the big volume and the big resulting open interest change, right? So now these two SPY positions right here, the 422s and the 435s, these have been closed completely. The trader now owns 440s and 442s at how much profit? So now they have 39 million profit right here, and they are still free rolling positions. So they're just taking profit, taking money off the table, but still staying bullish. This is just a really clean, incredible example of just so many different things at work right here. So let's continue here. So what's the date today? Today's the 6th, the 15th. I'm losing track with all these numbers here. So today we had another roll. So the 440, it was the 440s, right? So we can see here's the 2-day look. We can see in this case just very obviously or very easily identifiable green bars, not causing any kind of confusion. The open interest changing, so we know this is an opening trade. Here's their exit. Again, high multi-leg volume. Let's take a look here. What's going on? We can click on the arrow. We'll just find one that has it. Some of them may have it, some of them may not. We'll just find a nice big juicy one. So the reason why, or not the reason why, but just something to keep in mind is that there's nothing specifically tying one trade to another trade. For example, so if I click on the multi-leg icon that I mentioned at the beginning, there's nothing specifically linking this old trade with the new trade. What we use to determine that they're linked is we know that, so the trade automatically gets flagged as a multi-leg trade when it's executed, right? So we have that little flag. We know for sure because there's a little code that tells us, and if you can use size lots, or lot sizes rather, to kind of just like put 2 and 2 together, right? So like, how likely is it that there's two separate people each transacting 1194 size lots of these two contracts, right? Very slim. And again, if we take a look at just the chart, it's just very clean. There's no other activity to distract us, right? So we know exactly who these players are. We can see their movements. Now I'm just clicking around, sorry. What was I saying? Okay, so we have the, we're looking at the 440 exit, right? So here's their entrance, here's their exit. We're looking at the time and sales. So we can see the 440s being transacted at the bid. Now the 448s transacted at the mid. This one, like, you can't always use the bid, ask, and the mid to, for confirmation, rather. All we know for sure is that trades are taking place. So we use the bid, ask, and the mid to try and help us identify buyers and sellers. We can't always know for sure. Sometimes they help us. In this case, it's been a pretty good example of how it's not always as useful. In the very beginning trade, not all of the transactions were at the ask, right? You have not even half of them were at the ask. Most of them were taking place at or closer to the mid, in fact. The exit was cleanly at the bid. But then the next trade, the opening buy for these 435s, that took place at the bid. So this may have confused you. And then what's even more confusing is that when they sold these, when they closed them to sell them, more than half of it was transacted at the ask, right? So I hope you guys see just really good examples. Just repeat after me. Not everything at the bid is a sell. Not everything at the ask is a buy. All right. So now the 440, the 440s, we can see large volume here, large volume here. So the open interest ought to drop tomorrow. This position has been vacated. So these bottom 3 contracts, they no longer own these. They are now in the 440, the 442 strike calls expiring July 14th. These were opened yesterday. Yesterday morning they closed even higher. So they were getting filled at around 403 yesterday. Closed at 595. We'll round up to say 6. So they made almost 50% on this position. So 50% of 16 mil right here. So I mean that's 24 mil total equity there. This position they just opened today, trading a little bit lower. But anyways, all in all, right here, as we stand, 57 million locked up, and they're still free rolling 38,000 contracts a piece of the 448 strike calls expiring July 7th, as well as the 442 strike calls expiring on July 14th. So just an absolutely ridiculous trade. and one that I'm just going to keep on updating. I'm going to put links in the description box below for you guys to track the contracts yourselves. This one is the 440, which has been vacated, so this one's not useful. Let me see if I could just really quickly find one. I'm just doing this on the cuff. 442 is still open, right? Yep, so this one's still open. So this one might be useful for you guys to take a look at. I'll put the links to all of them in the description below. You guys can fiddle with the time frames to just see. You can play with the open interest. I think this might only go back 5 days if you're not subscribed, so you'll be able to see back to 5 days if you're not subscribed. But otherwise, I hope you guys have been having fun tracking this whale with me. It's just been really interesting to watch them just absolutely crush it. I mean, again, uh, where's the original tweet? Again, a 57 million profit, and they are free rolling two positions that are worth like, I don't know, 40, 50 million, just something absolutely ridiculous. But that said, since they have locked up a significant amount of capital, these trades are absolutely free that they're still in. So there's no guarantee of a further upside necessarily. So just keep that in mind if you guys were considering hopping on the train late. Um, just keep that in mind. Snorlax out. Hope you guys have a good night, and I'll see you guys next time.